Hello. Before you use a chart for a dollar index on the weekly term, where we had a strip of liquidity here, I will see the first leg, first break of structure. That is very clear. That is very conspicuous. It's this guy here. First break of structure. Then it's high. This is where we're supposed to set our sell order to potentially target these lower lows. That is according to the bearish version of the standard trading model that we've been talking about all along, where we said we need a sweep of liquidity with a first break of structure. See this first leg, first break of structure at its high right here. This is where we take our sell to potentially take our profits at these lower lows. But always I said that we can't take our partials right at the nearest liquidities of this leg. When we sweep this liquidity, this high that is created here is a very strong one, a protected one, as you've just seen here. Sweep of liquidity, protected high, stronger high. Then the clearest faster leg, first break of structure is this one. At its high right here, this is where we sell the market, this market to take our profits potentially this lower low. But we can always take partials at the nearest liquidities between all along this leg. Yeah, liquidities have been lying all along from this place too. Before we smash this high, before we smash that low. Yes, that is it. So what we can see here is that this market came, swept this high, first break of structures high. So there was a sweep of liquidity. We can all agree that. We can all see that, right? Oh, what am I drawing now? Ouch. Let's draw it this way. Terrible drawings, right? Ish. That one is also terrible. But just know that this is a predicted high. You see the first break of structure. This one is where we take our order to target this place. So there was a sweep of liquidity here, as I've just said. This market manipulated because we are anticipating a reversal. When we anticipate a reversal, the market first sweeps liquidity and then manipulates to induce buyers, because this is where the buyers were induced to believe that the market is still bullish. The market is still going up. But what you can see after this manipulation, this market now reversed, made a reversal. You can see after this manipulation, it created this high right here. See, this manipulation went to clear all this liquidity that was lying all along this leg, right, to this guy here. So we said, we have that sweep of liquidity right here, this guy here, right? We can have a first leg right here. See, the clearest first leg is this guy. In fact, coming to where? Can you say right here? No, there was a sweep of liquidity right here. The first break of structure right here. Then it's high, this guy. This is where we set our sell order to now ride the market to the nearest liquidity. This guy here. And we took him. The market went again back, but it never broke this high. That is it. That's why I said after the sweep of liquidity, a high is created, this guy right here, to take this lower lows. That is it. I just want to make a clarification on this area, yeah, from the previous video that I just dropped. All that was happening here, I discussed in the next video, whereby we said after the sweep of this liquidity, yeah, the higher time frame one that we are considering, the liquid that we are considering on the higher time frame is this guy here, following the model of version of the starter trading model. This guy second break of structures high, the first break of structures high. So a sweep of liquidity. We consolidated a bit. All this one was consolidation. Then we rallied down. First break of structure. This guy here, we are anticipating a sell from this guy. If the market reverses and gets to this place, this is where we're expecting to sell again. Simple as that. We can see this market came right here. This market formed after this first break of structure. The market still continued to drop, displaced leaving an FVG and balance here in form of an FVG. Yes, after that FVG was left, we can see now the market is reversing back to fill that FVG. That is a characteristics of FVG that we all know, that they act as magnets. Market always tends to be attracted to these places, these FVGs. The market always tends to go refill them before it moves to its direction. Yes. So when this market was going to fill this FVG, right, this weekly FVG, to retest this weekly FVG, you can see this week we swept some liquidity, right here, ta-da, swept some liquidity. After we sweep liquidity, it means that we create a stronger higher highs, right? After we sweep this liquidity to create higher high, we don't expect this higher high to be taken before these lower lows are taken. That is according to our model. That is it. That is according to our model. So let's drop down on the lower time frame and see what was happening here after this stronger high was created right here. Dropping down on the daily, this is what we can see. There was a sweep of liquidity from the weekly time frame somewhere around here, but again on the daily we can see there was a sweep of liquidity here, and the clearest first break of structure, the clearest first leg is this guy. The clearest first break of structure that we can see is this guy right here. Ta-da! Then it's high where we're supposed to sell our sell order, to set our sell order. If this guy, this inducement right here, ta-da! That's where we set our sell order and potentially to target this lower lows. Ta-da! Those lower lows were smashed. That is according to the bearish version of the starter trading model. Same thing, one model for life. We rinse and repeat every now and then until we get bored. When we get bored, that is the time now which trading becomes interesting. We only make money after when we get bored in trading. So this after this high is taken, we said we expect to take this lower low. But again, I said anything can happen in the market. Every moment in the market is unique. A setup might look very good. I'll see a good setup might turn out to be a loss. That is what trading is. That's why I said we can always take partials at the nearest liquidities, lest the market reverses and takes your stop loss. Now at this move right here, right, you can see the magical how this model is magical. When this second break of structures high is hit, the market usually drops like rapidly, rally or drop rapidly to hit this lower low. But we say always you can take partials. This right here is the liquidity to take partials. This right here was where we can take our partials. This right here, this is where we can again take our partials. Thank you. Right here is what happened last week. Right here, because we are on the daily. Last week, Friday, yesterday, there's 1, 2, 3, 4, 5. This is what happened last week. And you can see what happened last week is that, let's see what happened last week. We closed around here the other week, and I don't know whether it was taken. Yes. So yes, last week was a bit choppy. I can attest to that. Yes, there was no clear opportunity to take on with last week, because if we drop down on the 4-hour minute time frame, there was nothing very clear to take advantage of. That's why the aspect of now trading quality setups comes in. So in this dollar index, the way I've tried to look at it, because I don't know if anyone can trade dollar index, because I've never seen any a platform like in MT4 a dollar index being among the tradable assets. Usually, dollar index is used as a correlating factor, whereby because you can see here, right? Correlation. What is correlation? So correlation, how I understand about correlation. Correlation is a comparison of two variables in the direction of their movement. Two variables. In this case, in trading, we are comparing two tradable assets. Yeah, but mostly in forex we use DXY as a correlative factor, whereby we are comparing dollar index with other currency pairs, whereby we say we have positively correlated, we have positive correlation, we have negative correlation. Positive correlation, where the dollar index is moving the same direction as other pairs of currencies. Let me draw this T table, whereby we can have the positively correlated pairs and the negatively correlated pairs. On the positive, we have Euro USD, EU, let's say EU. We can have GU. I want us to find some commonality between these what I'm just writing here. That is NZD USD. We have AUD USD and others. And then here we have we can have USD CHF. USD CHF. We can have USD JPY. We can have USD JPY. We can have a USD NZD. That is the list we can. That's the list we can have, but we have many. We have many of them at this row. Whereby those pairs, positive correlation. Say, positive correlation is whereby a currency. No, these are negative. No, they're not positive. These are supposed to be negative. Then this one is positive correlation. Where we say positive correlation, dollar index moves in the same direction with these currency pairs. So these currency pairs with their first quote of currency as USD, all these pairs of currency, USD CHF, USD JPY, USD NZD, USD something, USD and what, so USD stroke something, all those currencies are positively correlated with the dollar index. And the negatively correlated currencies with the dollar index are those currencies with the best currencies as the dollar, as the USD. We have EU, Euro USD, that is GBP USD, the NZD USD, AUD USD. Those are the negatively correlated. They move in opposite direction. When the dollar index is moving up, then they are moving in the opposite direction. Let's put this into perspective from this chart. On this chart now, we are bearish on the dollar index. What does it mean? With the positively correlated currencies, pair of currencies, and they are also moving downward there. Those currencies are also bearish. USD CHF, USD JPY, USD NZD, USD dash. all of those ones are also bearish. Now, when this dollar index is moving downwards, then it means for the negatively correlated currencies like the Euro USD, the GBP to GBP USD, NZD USD, they are moving up. They are moving in the opposite direction. So dollar index is mostly used to bring some clarity for these pairs. Of course, with this correlation, with these negatively correlated pairs, with a small bit of my experience in these markets, EU Euro USD is more of perfectly correlated with the dollar index. Is perfectly more of negatively correlated with the dollar index, whereby we say negative correlation, they move on opposite directions. So that means the patterns that are forming on DXY, if you reverse that chart, is more likely to be the same pattern that that Euro USD is forming, right? The closest one to follow is this guy, this GU, negative correlation. Those with the dollar pair, they are more likely move in the correlation. Then the opposite correlation is not that much of a difference. Then with the positively correlated currencies, the one that I've seen moving the same direction with the dollar is this guy here, this first guy here, USD CHF. If the dollar index is not usually clear, I go to this guy, this USD CHF. They more likely move the same, right? They more likely negatively correlated with EU. Yeah. So if I can't go to DXY to find some clarity on what the EU is doing, then I move to USD CHF. That is it. Dollar index, USD as the best currency. Yeah. An aspect of USD as the best currency, of most currencies use USD as their best currencies. Yeah. The dollar is the most used currency in the world. That means the dollar is the most liquid currency. Okay. Liquidity, where orders are separate. Yeah. It's the most used, so it is the most used currency. So that's why you see most it's advisable to trade those pairs which have the dollar pegged onto them, because the US economy is big, and so these markets mostly are what the news, for the fundamental traders, the news are the ones which usually bring a lot of volume in these markets, for these markets to move, rally up and down with big volatilities, whereby let's see this. See, I said there was some form of consolidation here. There is an aspect of time and price. The market was trying to waste some time. Know that the both know that the best word to use. The market was trying to aspect of time and price in trading, whereby time matters so much. When see, when is the term that we are asking ourselves here, and when is mostly news, or specific times at the open of the market or the close of the market. So when the news are released, that's what the point I'm trying to drive in. When the news are released, so this consolidation and this drop down here, I'm pretty sure this drop here didn't happen just normally. It was the news, the release of the news, and the red folders news, the ones that cause a lot of volume, a lot of volatility in these markets, is the one that see is CPI, that's Consumer Price Index. You also have FOMC, that is in full FOMC, form of member companies. What? FOMC. We also have NFP non-farm payroll. We have also unemployment claims. So those news are always marked red folders when you go to factory to Forex factory. They usually bring a lot of fluctuations in the markets. That is it about correlation. I thought that is something to touch on. So my long-term anticipation for this dollar index is we take this lower low, depending on this pattern. Right now we are on the discount zone, and anything can happen. Discount zone we might even reverse, but next week I might expect this market to come to touch this FVG, right? To touch this FVG on the weekly, but on the daily, let's look at on the daily. On the daily, I'm expecting this guy to come to take this FVG, take this lower low again, the small manipulation again, before we rally up to this guy. Or we can even just fill this FVG and we continue downwards. But this weekly FVG that is down here is a strong one, so it will have some form of consolidation. Market might will now wait a bit here. That is it for today. That's what I can say. And thank you so much for if you've been with me to this point, this time. Thank you for watching. If you find this informative, if you find this of insight, if this helping, you can always like the video, share it to your friends, and for the new ones, you can also, for the new guys, you can also subscribe to the channel. That's only the return of investment that I am requiring from you. Thank you so much. I believe this is a very good documentary, a very good journal for me, myself, and those ones also interested in knowing this kind of business, so that we can all make money in this market together. We can grow together. These things I'm trying just to journal what my knowledge of this markets, right? What I've grasped on this market for this little time I've been on this industry. Yeah, that is it. And I'm also trying to share how I trade. That is exactly what I'm doing. Thank you so much and take care. It is a Christmas Eve, 24th. So for those who are celebrating Christmas, Merry Christmas. Thank you and bye.